Starting your first business and not sure exactly how to get set up, either as a sole trader or a limited company. So this is part 2, and I'm gonna look at limited companies. The best thing about having a limited company is that you have limited liability, meaning that if you get sued, your company gets sued and not you personally. So none of your personal assets are at risk, which is fantastic, and I think the biggest advantage of having a limited company. But again, this depends on what products and services you're actually selling. Is there a risk? We're always thinking about the risk. Tax planning, there is lots more tax planning opportunities with a limited company than you have if you're a sole trader. However, remember that we have to make profits in order to get these tax planning opportunities. In your first year of business, it is not that common to make a massive profit. Depending on the industry you're in, of course, but I don't think there's any industry that in your first year you make loads of profit. It costs loads to set up a business. It's a bit of a pain when you're getting started, you're finding your feet. So I don't think this one is going to be that useful to start with, but it's something to consider for future. It has more prestige, so it makes you look a little bit more professional. You'll look better in front of your friends if you're a company director. Again, depends on who your customers are. Are your customers even gonna know? Maybe if you sell products on Etsy, are your customers really going to know if you're a limited company? But what would be more important is if you're, for example, a lawyer, then people are probably going to check on Companies House to check that you're registered on there. Selling your business. You can just sell your business as a whole. If you're planning on building it up, selling it pretty fast, maybe this is the best option for you. And then tax-wise, what are we going to be filing for our company? So we're going to have a corporation tax return, which is due every year. We're going to have accounts which need to be submitted to Companies House every year again. And we'll have a self-assessment tax return, because when we extract funds from our company, we'll be extracting most of our funds as dividend. Dividends aren't taxed at source. Like, for example, if you're employed currently, when you get your pay, it has already been taxed. So you've already had tax taken out. When you take a dividend from your company, it is not already taxed. So that is why we're filing our self-assessment tax return, because you've got to pay income tax on dividends. You will have already paid corporation tax on the profits, and then you pay again on the dividend. But dividend tax rates are lower than income tax rates. Of course, you will need an accountant for your limited company. That increases costs. There's also a lot more setup costs, and it's a bit more of a pain. If you want to ditch it, it's a pain. There's a lot of paperwork to fill in, so it's not that flexible. So if you're a bit unsure about what you're doing, you may be just having a start at trying something new, going through all this hassle is probably not the best way to go.